You get your first client, you send the invoice, the money hits your account, and for about 10 seconds you feel unstoppable, and then this tiny voice shows up and asks, wait, how much of this is actually mine? Because nobody tells you the part where freelancing comes with a second invisible job called tax compliance. The worst part is that the IRS doesn't care that you're new, your state doesn't care that your income is irregular, and penalties don't care that you meant well, which means the difference between a calm first year and a painful first year is whether you set up a simple system before the money gets messy. My name is Hector, and I help self-employed people build tax systems that keep them legal, calm, and profitable. Here's why this matters right now, even if you're only making a few $100s on the side. When you're self-employed, taxes are not something that gets quietly withheld for you, because you are the withholding department now. And if you don't plan for that, you can end up with a surprise bill that lands like a car repair you didn't budget for. The good news is that you do not need to become a tax nerd to handle this, because you just need a handful of fundamentals that make everything else easier. Stick with me until the end, because I'm going to give you the simplest first week setup that prevents most freelancer tax disasters, and then I'll show you the 2 numbers you should watch all year so you always know where you stand. The first place to start is not a form, and it's not a fancy business structure because it's a separation move that stops your finances from turning into spaghetti. You need a dedicated business bank account, even if you are a one-person operation, because when personal and business spending mix, you lose deductions, you lose time, and you lose the ability to prove anything if you ever get questioned. This is not about looking professional on Instagram, because it's about being able to say, this is my business income, these are my business expenses, and here is the clean trail that supports it, which is what makes filing easy and what makes audits boring. Once you have that account, you do the next move that makes taxes feel predictable, which is the freelancer version of withholding. Every time you get paid, you set aside a percentage for taxes immediately, and you do it before the money becomes available in your brain. A lot of people use a separate savings sub-account or a second bank account labeled tax because it creates friction that prevents accidental spending. The exact percentage depends on your income and your state, but the point at the beginning is not perfection, because the point is building the habit so you stop living in the fantasy that the full payment is yours. Now let's talk about the taxes you're actually dealing with, because this is where people get confused and start procrastinating. As a freelancer in the US, you're usually dealing with income tax and self-employment tax. And self-employment tax is the one that surprises people because it covers Social Security and Medicare that would normally be split between employee and employer. When you work for yourself, you're both, which means you're paying the combined share. And that is why someone can make what looks like decent money and still feel shocked by what they owe. This is why your first tracking goal is not, how much did I make? Because your first tracking goal is, what is my profit? Taxes are generally based on profit, meaning income minus legitimate business expenses, and that is why record keeping is not a chore, it's literally money. If you do not track expenses properly, you will overpay, and you will not even realize you overpaid because it will feel like the system is simply harsh, when the truth is that you left deductions behind. So here is the simplest record-keeping system that works for most beginners. You track every dollar that comes in, you categorize every business expense, and you store receipts in a way you can retrieve later. And your entire goal is to be able to answer one question without panicking, which is, why did you deduct this? You do not need a complicated app to start because you can use a spreadsheet or simple bookkeeping software as long as you are consistent and you update it weekly instead of once a year in a spiral of regret. The next place people get stuck is what counts as a business expense, because it's tempting to treat your entire life as content or networking or inspiration, and that is exactly how you create an audit trap. A business expense should be ordinary and necessary for your trade, which in plain English means it should make sense for your work, and it should have a clear business purpose. Software subscriptions, business tools, equipment used for work, professional services, a portion of phone or internet if it's genuinely supporting the business, and business travel that has a real work purpose can be legitimate, while random lifestyle costs dressed up as business are where people get into trouble. If you want more of these, keep it simple, keep it defensible tax videos. Subscribing is smart because most freelancer problems are not about missing a secret loophole. They're about missing the basics that keep you out of expensive trouble. Now let's handle the most important timing issue in self-employment, because it's the reason people get surprise bills. In the US, You may need to pay estimated taxes during the year, usually quarterly, because the government does not want to wait until April to get paid. This is not something to fear, because it's basically you prepaying your tax bill in installments, and once you plan for it, it actually reduces stress. The trap is when you ignore estimated taxes all year, spend the money, and then try to come up with a lump sum at the deadline, which is when people go into debt for taxes, which is a pain you do not need. So, what do? Practically, if you're brand new and your income is unpredictable? You pick a simple cadence, like checking your profit once a month, estimating what percentage you owe, and moving that into your tax account, and then you make quarterly payments if you're required to. You do not need to guess every number perfectly, because you can adjust as you learn, and the goal is to avoid being wildly underpaid while also avoiding the stress of a giant surprise. Here's the second number you should watch all year, because it keeps you grounded. The first number is profit, and the second number is your effective tax set-aside, meaning how much you've saved for taxes divided by your year-to-date profit. If that percentage is staying healthy, you are safe, and if it starts dropping, you know early that you need to increase your set-aside or plan for a bigger payment, which is a much nicer situation than discovering the problem when the deadline is 2 weeks away. Now let's talk about forms in the least scary way possible, because people hear Schedule C and mentally leave the room. Most freelancers report business income and expenses on Schedule C, and your profit flows into your personal return. And that is why the separation and record keeping we talked about makes everything smooth. You might receive forms like a 1099 NEC from clients or a 1099-K from payment platforms, but you should not rely on forms to tell you your income, because the real rule is that you report all business income, even if nobody sends you a form. Think of forms as clues the IRS also receives, which means you want your own records to match reality so nothing looks missing. There's also a state layer that can matter, because some states have income tax, some cities have local taxes, and depending on what you sell, you might have sales tax obligations. Service freelancers often don't deal with sales tax, but product sellers and certain digital goods can, and the safest mindset is to check your state rules early so you don't wake up 6 months in with an unexpected registration requirement. If this is helpful so far, hit like, because it helps other new freelancers find the calm, accurate version of this topic instead of the panic version that makes people freeze and do nothing. Now let's cover the question everyone asks sooner or later, which is whether you need an LLC or a corporation to save on taxes. Most beginners do not need to rush into complex structures just to start freelancing, because the first big win comes from clean records and consistent tax saving, not from fancy entity paperwork. An LLC can be useful for legal liability separation, and certain tax elections can matter later when profit becomes stable and meaningful. But if you optimize too early, you can end up paying for complexity that doesn't pay you back. The smarter move is to get your basics solid and then revisit structure once your income is consistent enough that the decision is based on numbers, not on internet hype. Before we wrap, here's the beginner checklist that keeps your first year clean. You separate business and personal money. You save a percentage for taxes every time you get paid. You track profit monthly. You keep receipts and categorize expenses consistently. And you learn the estimated tax rhythm so you're never surprised. If you do those things, you are already ahead of most people who freelance for years while flying blind. Quick note, because it matters and it keeps you safe. This is general education, not personalized tax advice. And if you have a complicated situation like multiple states, a partner, big deductions, or a fast-growing business, it's worth talking to a qualified tax professional. If you want a simple tool to make this effortless, I have a Freelancer tax starter kit that includes a plug-and-play expense tracker, a quarterly tax reminder calendar, and a one-page what to save and when to pay guide that turns taxes into a repeatable system. Use it for 1 month, and you'll know exactly where your business stands, because you'll stop guessing, you'll stop fearing the deadline, and you'll start treating taxes like what they actually are for a freelancer, which is a predictable process that you control. And once you control it, you can focus on clients, pricing, and growth, instead of losing sleep over a bill you could have planned for, starting with the next payment you receive when you set aside the tax portion first, and you keep the rest with confidence, because that single habit is the difference between feeling broke on a good month and feeling stable on a normal month. And if you build it now while your business is still small, you'll never have to unlearn chaos later when the money gets bigger and the mistakes get more expensive. So grab the kit if you want it and set it up today. so your next tax season feels almost boring, and you keep more of what you earn without the stress of guessing whether you're doing it right, when the answer can be obvious as soon as you finally track profit and pay as you go, and you stop treating April like a cliff. You fall off every year, and you start treating it like a simple checkpoint you pass on the way to building your own income on purpose.